Hey guys, welcome. It is Monday evening, excuse me, July the 7th, in preparation for Tuesday, July 8th trading. We're going to continue before we jump into the market analysis here. We're going to continue with Market Wizards interview with top traders by Jack Schwager. He's in the process of interviewing Mark Weinstein, high percentage trader. I may cut this a little short just because I got a couple things to go into on the market analysis here. Schwager says, "Do you remember your first trade?" He said, "I remember exactly. I opened a commodity account with $8,400 and I went long corn based on a recommendation made by the firm's grain analyst. 3 days later, I was out $7,800." Um, he said, did you know anything about the markets at the time?" Schwager asks. And Mark Weinstein says, "Absolutely nothing. If I flipped through a chart book, it looked like a collection of TV test patterns to me." Schweiger says, "Didn't it occur to you that you should learn something before you started?" Mark Weinstein says, "No, because I was desperate for a change. I did not like being a real estate broker." "Was the money that you invested a substantial part of your savings at the time?" Mark says, "It was all the money I had." Um, Schweiger says, "What were your trading results the second time around?" Obviously, I've skipped over some stuff here. Mark Weinstein says, "I did well for several years after that and managed to build a small fortune, but a lot of that was due to luck." Schweiger says, "It couldn't have all been luck. What were you doing right when you were making money?" Weinstein says, "In relation to what I know now, there was very little that I was doing right. I think I just had good markets. In those days, commodities seemed to follow chart patterns a lot better than they do now." Excuse me, very few people knew anything about technical analysis then, so the markets were much more orderly. I got a break by learning as much as I could about technical analysis at the time when it was working pretty well. Um, Schweiger says, "Were you spending all day trading?" He said, "All day and all night. I was losing friends left and right. I sat in a studio apartment with charts plastered on every wall. I probably looked like a madman to the friends I had left." Swagger says, "So this was really a full-time endeavor." "Not only an endeavor, it was an obsession. I slept with it. I dreamt about it. Sometimes I would stay up all night thinking about what I would do the next day. If I didn't need sleep, I would have done it 24 hours a day. At that point, it wasn't the money that was motivating me. I was hooked on the game, on the challenge of trying to figure out the market." "Did you have any goals when you set out?" asked Swagger. "Well, the great American dream is to make $1 million, and that was particularly true in those days. I never really had a materialistic dream until I started vacationing and traveling in Europe." "When was this? How many years after you first started trading?" asked Swagger. "It was in the mid 70s. I had been trading for about 3 or 4 years." "Had you passed the $1 million mark by that point?" asked Swagger. Says, "Yes, I had made enough money to be able to relax, start vacationing, and think about things I wanted to buy. At that point, I was feeling confident enough to know that I could replace the money I spent with my trading profits. I figured the next logical step was to start appreciating the money I was making. I saw a castle in the south of France that I wanted. I was particularly impressed that the castle had a moat around it, and the idea of living there appealed to me. It was on the market for only $350,000, and I figured it would only take about $50,000 a year to keep it up." "That doesn't sound like a lot of money for a castle," said Swagger. "Today it's probably worth 5 million. When I came back to the United States, I wanted to make the money to pay for the castle almost immediately, and that was a tremendous mistake." "I don't understand. You already had the money to buy the castle. You didn't have to make it." Mark Weinstein says, "Even though I had the money, I still looked at it in terms of how much it cost. I know people in this business who have $17 million in their trading account and won't even buy a new car." So he said, "So you didn't take your money out of the account to buy the castle?" "No, instead I came back and decided that making the money was going to be my goal." That's the same type thing. There's a story by John Carter about making that money to buy his house instead of pulling the money out of his market account. It's a good read on that with John Carter. So Swagger says, "In other words, your next $350,000 in profits was going to go for the castle." Exactly. What happened next? And we will get back to that starting tomorrow. Because I want to jump into some of this analysis without making this video too long. All right, so we're going to jump into the 65,000 tick chart here. You see we had this morning. Well, these were, if you remember, were kind of my measured moves, projections there. You see this morning we did this move down from Wednesday's high to Friday's low. Yep, to Friday's low. Then we did this retracement back up today. We were back up here around the 61%. That was at the highs of 63.15, you know, the 10 to 15 zone here. I think that's when I started shorting initially. And I may have waited until we were down closer to the 6,300. We may have come down, come back up, and started to fail that again. But yeah, it would have been, that's 932, so it may have been somewhere in here I started shorting. But anyway, this we did this pull down, moved back up to 61.8% retracement. We had that Keltner channel reversal set up in my mind, and so that set up the short for the day. So this move, if you take this measured move here and then you were to move it down to the high of this peak here, you can see that we went down, kind of exceeded past it just a little bit. I think Buddy had the 50 to 52 zone here as his projected move down. You know, roughly we're here 58 to 60 zone, where we spiked down, came up. Looks like we tested back down in the 55, and now so far in the Globex session, we're moving back up to the 77 zone. So careful not to get chopped up in this. Okay, so objective moves 62.55. Sorry, hang on. Let me read my notes here. Prior resistance zone. Oh, yeah. This 55 here. Let me reset this. So the 62.55, this zone right here, we were kind of coming into prior resistance up in this area. We kind of found a little bit of support here today. So if tomorrow is a banger day, a Z day, try not to get caught up in this 55 to 60 zone here. Get chopped up. Wait for a move, you know, on down. Let's try not to get caught up in this price overlap area here. If it does have a Z day tomorrow. Wanted to pull over the daily here. Show this. So we had this wave 1 here on this 10 move up, then a 5 SMA. Wave 2, we had 9 up, and then a 5 SMA buy. Wave 3 had 9 up, then a 5 SMA buy. Wave 4, we had 10 days, and then today we closed below the 5 SMA. So we had an extended run above the 5 SMA. This is wave 4. Today set up a wide range 7 day, as well as we are still, let me kind of zoom in on this here, guys. We did a wide range 7, and we set up a 5 SMA buy. However, we are still inside this 3 bar from back here on the 2nd to the 3rd. Then the 4th actually did an inside day here. So that set up our 3 bar. Technically still today, we are still inside that 3 bar. So I wanted to show that. Let me reset scaling here, go back. I've shown you these 4 waves of these extended runs. I've shown you the wide range 7, the inside 3 bar, 5 SMA buy, however, we're fairly extended on that. I've pointed this out to many times, and I want to keep pointing this out. This type of a pattern on our LBR 310, this is the daily. Well, the slow line is still continuing to stay above the 0 line. Wanted to show that on a 5-minute for today. Let's just convert that to a 5-minute. So on the 5-minute for today, you can see how the flip, the inverse is correct, is true here. We're below the 0 line, and the slow line just stayed down here below the 0 line all the way until this move here at the end of the day. Matter of fact, this is the 1600. So finally at 4 o'clock, we moved up above that after staying suppressed below this. The more I see this type of a pattern, if I can identify that early, it's kind of kind of leads me to say, hey, if we're staying below that, look for shorting opportunity. Obviously, the breadth was giving us indication of that today. The VIX was giving us indication of that today. The volume that was coming into this morning, the first 15 minutes, was giving us indication of that. But this pattern, I just want to keep my eye on that pattern. So that being said, on the daily, we have not broke down below this, even though we may be thinking, oh, we're bearish, bearish, bearish. Well, so far, as of this moment, that has not broken down yet. Um, okay, let me go back to what I was talking about on this Z day or potential Z day. Usually, after you have a trend day, you can have a Z day following. Let me pull this over. This is from one of Linda's things. I was looking for the statistics on if you if you have not filled a gap within 4 days or something like that, it has a greater tendency to stay above that gap for 2 weeks or more. But we'll get back to that here in just a minute. Trend days occur when there's a big price gap on the opening. It is generally difficult to predict with any statistical accuracy whether or not the market will trend up or down after that gap. However, the best entry signal is to buy if the market starts trading higher than the first hour and sell if it breaks below it. Aggressive traders like to cheat on this parameter and try to enter a bit early. This is also the next way to enter breakout traders where the previous day's range has been relatively narrow. So we can come back to that maybe later. Anyway, so this remind me to get back to that above and below the first hour's range. Okay, sorry. So we're still in this 3 bar. So tomorrow, if we do a Z day, I may have these notes down here lower, but I'm going to go ahead and cover it now. Let's say this price goes up here and we poke above today's prior day high. We still have room to run before we're out of that 3 bar. If we poke below today's low, we still have room to run before we're out of that 3 bar. So in other words, don't get overly bullish breaking out the top. Don't get overly bearish breaking down below that. We do have a potential Z day setup here. We still have on the daily chart, everything's showing positive on that. On the LBR. Okay. Oh, on the 15-minute, the gap here on the 15-minute, wanted to show that. Showing this more recent gap here. Sorry, give me 1 second. Pull some extra data in. Oh, where'd it go? There we go. Okay, so you can see these other gaps below. This gap here, when we made it between the 23rd and 24th, so that gap did not get filled. Let's kind of do a quick little count here. So we gap up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 trading days. We have not filled that gap. So that's basically 2 weeks worth of trading. That's 5 days each, 2 weeks worth of trading. Well, this day here may not have counted. But so basically we've stayed above that gap because we did not fill back into it within 1, 2, 3, 4 days. We did not fill that gap, so we had a greater tendency to stay above that for the next couple weeks. So that model has played out here. Will we go back down here and fill this now that we've started this little bit of breakdown or not? I don't know. Okay. Yeah, I couldn't find that exact quote in my notes. But let's look on a 60-minute basis here. Okay, so this is where the notes I read from Linda come into play, where we gap down from Thursday's high or Thursday's close to Monday's open here. We can kind of disregard or this here. So when we gap down, we didn't know if we would trend up or trend down. But you can see this low here came in at 62.9350. We broke below that starting the second hour. So this was a 10:30, 9:30 to 10:30, 10:30, 11:30. We broke below it. We only had a high of 99. So the low here was 93 to 99, about a 6-point move up here. Your stop would have been somewhere up here at 63.09. Instead, we broke down that model played out also. So those are kind of some things to keep in mind, after the first hour of trading, if you have a larger gap. Again, guys, that's key with a larger gap, not necessarily just everyday trading. Okay. Um, yeah. This is where I said um, okay. So I measured this here from Thursday's high to today's low. A 61.8% retracement puts us back up here at 6,300. Um, that move back up here, or even taking out this high. Like I said, there's still room to run without taking out the high of that 3 bar. And if we take out today's low, there's still room to run without taking out this low down here. So let me go ahead and put some horizontal lines on those. So this would be our three bar based on a intraday chart. So keep that in mind. Now this 60 is starting to roll over. It'll be interesting to see if we have that failure finally of this pattern. See if this pattern finally starts failing. If it does, then we can still be looking for some shorts. Now, again, here's a 61.8% retracement is back up here at 6,300. Currently, prices are trading at sorry, let me get back over here. Currently, prices are 62.78. So we're right on our gap chart, 62.78, 79. So we're up here at 32% retracement. A lot of room for downside, a lot of room for upside potential. So that does open it up for a Z-Day potential tomorrow morning. The internals is the last thing I wanted to touch on. Sorry, this video is getting a little bit long, guys. The VIX. We saw that we were looking at this. I was saying that this likely to play out. Beautiful to see that VIX divergence finally play out today. Finally, the market gave up. I don't care what the tweet was, what the news was. The internals were telling us what was going to happen before it happened. So we got to keep paying attention to those internals. The breadth. I did want to show this on the breadth. And that is, the last times we were hitting in these -16 or greater, closing the day at -16 or greater on the breadth. This is a line chart of the SPY. This close here, we did have slight additional downside the next day, not a whole lot. This close here led to a little bit further downside. This close here led to actually upside. This close here led to upside. This one here, slightly more downside, slightly up. What will tomorrow hold? We don't know yet. Will we have slightly up or slightly down from there? So I just want to look at the breadth on that. All right, guys. Like I said, my assessment is overall, I think we could have a potential Z day tomorrow, consolidation type thing. However, I am watching this 60-minute to see if this LBR slow line breaks down below that. If it does, I'm going to continue to look for shorts. If it finds strength and comes back up in the morning wherever we open at, then it would, then this pattern would still be in effect of, sorry, dang it. This pattern would still be in effect of long only, as long as that slow line's above there. All right. Hey, happy trading tomorrow, guys. Do not worry about losses. They are in the past. We trade futures. The more important thing to me is getting the idea right. If you're getting the idea right and you take a loss, that's okay. It's just a matter of adjusting your entry. It's when I've been guilty of taking loss after loss after loss, trying to force something to happen, and I have the idea wrong. That's where it kind of pisses me off. But if anybody took losses today, it's okay. We got tomorrow and the next trade. Just one good trade tomorrow. That's all you have to focus on. One good trade after the other. So your next win is in front of you. Does not matter what happened behind you. All right, we'll talk soon, guys.